Hi, I'm Doug Miller from Miller Prost. We are a team of CPAs and business advisors serving clients all over the U.S. Our firm has been in business for over 30 years and has offices in the Midwest and on the West Coast. Today, I'm here with Mike Devereaux, one of our Miller Prost partners, to share some information about the Tax Increase Prevention Act and how the Senate's passage of this extender's legislation may impact you. Mike?
Had this legislation not been passed, hundreds of thousands of individuals and businesses would have seen a higher tax bill for 2014. Many of these provisions aren't entirely new, but you may not have been aware of them or been taking advantage of certain tax credits. Prior to this legislation, many of these provisions expired on December 31st of 2013. This extender legislation retroactively extends these important tax provisions through December 31st of this year. Doug?
Some of the most prominent tax provisions that could affect your business include bonus depreciation. The extender legislation extends the 50% bonus depreciation for assets placed in service now prior to January 1 of 2015, thereby extending this popular tax break for one more calendar year. That is, taxpayers may claim a bonus depreciation deduction equal to 50% of the basis or cost of the new assets. This can apply to both real and personal property, and the real property has to have a class life of 20 years or less. That's why cost segregation studies might be beneficial to your tax strategy for 2014. Also, Section 179 was extended. This bill extends the small business expensing limitation and phase-out amounts in effect during 2013 to 2014. They're now $500,000 we can expense, and once you buy more than $2.5 million of property in any one year, you'll phase out of this tax benefit. There's also Section 179, capital D, Energy Efficient Building Deductions. Now, this is available to taxpayers implementing energy efficient designs or improvements to the building envelope, the lighting, or HVAC of commercial buildings. This provision allows for accelerated deductions, depreciation, worth up to $1.80 a square foot. In addition, engineers, architects, and design build contractors that build for governmental projects may get this deduction even though they laid out no cash. Section 45L has also been extended. This is energy efficient for new apartments and homes. This is available to owners of apartments, senior living facilities, assisted living facilities, and other buildings. This provision allows for a tax credit equal to $2,000 for every new energy-efficient dwelling unit. Now, both these provisions, Section 179D and 45L, require certifications. Our firm has the capabilities to help you obtain these certifications and tax benefits. Mike?
Also included in this bill is a one-year extension of the R&D Tax Credit, which is available to manufacturers, software developers, and engineering firms for the development or improvement of products, processes, techniques, formulas, inventions, or software applications. Now, we've seen numerous changes to the R&D tax credit through 2014, including the ability to elect the alternative simplified credit on amended returns in certain circumstances, new regulations with respect to research expenditures, and taxpayer-friendly case law. In addition, the Work Opportunity Tax Credit was extended. The Work Opportunity Tax Credit allows taxpayers to claim a federal income tax credit equal to 40% of the first $6,000 of wages paid to a member of a targeted group of employees. The Work Opportunity Tax Credit is one of the few tax credits that may offset the alternative minimum tax, making it particularly advantageous to those taxpayers subject to the AMT. This, of course, is only a small selection of those provisions included. You can visit us at millerprost.com to view a comprehensive list of all the included provisions. Doug?
Thanks, Mike. These rules are complex, and you should consult a professional well-versed in the details of each section. We're here to help you understand how these rules will and can impact you. Give us a call to discuss your very specific tax situation. We're Miller Prost, and we advise with vision.